Folks, insanity incoming. All of the data suggests that this week is going to be one of the most aggressive squeeze weeks that we've seen yet. I believe there's going to be a lot more 100% plus gainers this week, and in this video, I'm going to explain to you exactly which tickers I believe are the most likely to fall into that category. Let us get right to work, but I want to start you with some context. So right now, we are in a huge squeeze on the entire market. Some would say a squeezy McSqueezy, but the biggest concentrated squeeze right now that you are seeing is on tech specifically. When markets turn around, the best performers become the worst performers, and the worst performers become the best performers. And that's what's happening right now. Since the start of the sell-off, the first couple of trading days of 2022, the NASDAQ 100 has failed to achieve any real breakout above our red directional SMA, rejecting a break back into a upward direction again and again as tech stocks moved lower and lower. However, after bouncing the first couple of trading days of this year, the market has blown through and completely obliterated, just completely destroyed the directional SMA line, finally accepting an upward direction and doing it very, very confidently. And this is alongside a complete paradigm shift, where markets now believe that the Fed is backing off and that the inflation problem is a chapter behind us, and most importantly, that we are heading for a so-called soft landing. Now, I believe that at minimum, the market is being naive on the soft landing, but really, who cares? How can we make money off this? There's two types of people in the stock market. There's people that are mostly interested in being right on their overall prediction, and there's people that are interested in making money. The people that are interested in making money know that it's not about being right, because markets can debate what the right answer is for long periods of time. You never want to be somebody who's more interested in your economic thesis being right than you are in actually being able to ride trends and make money. People that are like, no, I'm bearish because the macro condition is bad. Well, when they have big rallies, they're like, nope, I'm sitting it out. Nope. I can't play that because guess what? Long term, I don't believe in the economy. It's like, well, okay, wait a second. So a stock goes up 300-400% because of an irrational squeeze, and you're not going to allow yourself to play it because you believe 3-4 months from now things are going to go back down? That doesn't make any sense. I've been bearish for a year plus. Does that mean that I'm going to ignore all these massive squeeze runners? Does that mean that I don't like contrarian trades? Obviously not. That would be stupid. I hate the people on Wall Street that are like, you have to only accept one way or the other, even though we're playing all sides of the move because that's where the money's made. Look, folks, we all have our opinions on the weather patterns, but that doesn't mean that we can't adjust our sails as we see sun or as we see rain. It's always the people that don't adjust their sails that get screwed up the wazoo, like the short sellers right now. The Wall Street Journal just reported short sellers are feeling the pain in 2023's stock market rally. Oh no, a real tragedy here. Thoughts and prayers. A Sachs of Goldman index tracking the 50 most shorted stocks in the Russell 3000 has returned 15% so far this year through Thursday, substantially outperforming the S&P 500, which is up just 6%. So bad and so sad. Here's the thing you have to understand about short sellers. A lot of them that are short stocks right now are justified. Again, from a macro thesis, it makes sense. If you are a short seller shorting a bankrupted company that doesn't look like it's going to survive another month, well, hey, you're justified fundamentally. Problem though is that is oftentimes not enough. A lot of the time, short sellers want to push the companies into bankruptcy themselves. They'll do this through biased media articles. They'll do this through mainstream fear campaigns. They'll do this through social media bots. Or they'll do this through naked short selling shares and creating false dilution, really, on a certain stock price, which then goes and artificially pushes that price to the ground. Once the stock is artificially suppressed, and all of this negative media coverage is out on the stock, well, you could say goodbye to any ability to raise capital via financing or new offerings. So essentially, short sellers can really use their power to short stocks into the ground and take home a massive profit that they could use to put their mistresses in yet another penthouse. The problem, though, is that this strategy only works if nobody calls BS to the short sellers. If somebody calls BS and you get enough buying in, all of a sudden, this massive short to the ground strategy leaves them open to an overexposure to risk. And when broader market trends start moving back into small caps, all of a sudden you see this wave go and lift and explode a lot of different stocks. And then you have all these short sellers who are just basically left unguarded. And that's so far has been the game in 2023, and I think it's going to last a while, at least until the next Fed meeting, at least until we get another bad inflationary report, or you actually start seeing some adjustments downward on earnings, which could take a little bit more time. Okay, first squeeze stock to cover, the holy GNS. Yes, GNS is active for another week. And their CEO, Roger James Hamilton, tweeted this week in quote, "We're just getting started. Getting that suspense up, are we? I told you weeks ago this guy was a showman and he was going to keep driving interest into his stock. Here's another example of that. Now, for context, we originally briefed on this one at 70 cents on January 19th. The reason we briefed on it back then was because their execs announced they were embarking on a massive war campaign against alleged naked short sellers. And combined with the very, very ripe setup, I believed that this stock would go parabolic, and it has gone parabolic, going from 70 cents to $8.71 at highs on Thursday. Now, that is a 1,144% run briefing price to highs. Now, obviously, not all of our briefing plays run this much. This is an example of a best case scenario in a really hot market for small caps, but it is hard to find these at all if you're not showing up every single day and putting in the work like we are, right? It's all about work, research, and identifying trends so that you can find stocks that fit those trends before they run. This was a stock where our entire thesis was built around it having a regular onslaught of catalysts to make it run, and that is exactly what has happened. But anyways, as you've seen, the stock has had many growth spurts and then breathing cycles, and I believe that we are in yet another breathing cycle before another push upward. The question is, what is the next catalyst to push the lovely GNS to the next new high? Well, over the weekend, the CEO tweeted that a wave of merger/acquisition opportunities are coming our way. Should we give 10% GNS equity for 40% revenue growth, 400% EBITDA growth? Now, what I believe the CEO is doing right here is very, very interesting, muy interesante. Short sellers rely heavily on a narrative that says this company that we're shorting is complete garbage, going out of business, the insiders don't know what they're doing, this stock is going to zero. But when a company goes and starts acquiring and or merging with other companies, it creates this new risk factor because it's a show of strength for that company and a show of value for the underlying business. Companies with no inherent cash or value or strategy can't merge or acquire other companies. You saw the same story with Mullen. Short sellers were like, yeah, Mullen, zero. And then all of a sudden, Mullen's like, okay, well, we're going to start acquiring things. And they use some pretty crazy financing methods to do that. But still, when they announced those acquisitions, all of a sudden, Mullen went, whoop. It's one of those things where in order to fight against the short seller thesis, they just have to convince markets that they're viable. And then all of a sudden, shorts get punched in the face. And the act of just simply publicly talking about it, they don't have to do anything, but the act of simply talking about it is enough to create speculation and to create fear that, hey, wait a second, if I'm short this, well, maybe this company is just a catalyst or two away from going up another 200, 300, 400%. I don't know if I can take on that risk. I don't know if I want to. Next point I want to make here, the CEO published a naked short CEO playbook. So far, we are in the stage where he is issuing an NFT coupon, and we are still waiting for SEC approval on the special dividend. Both of those things are being done with the intention of revealing the number of naked short sellers allegedly short the stock. Both of these things have their own anticipatory hype around them, which should keep GNS in the process of staying relevant and on a breakout climb. And as Yoda once said, squeeze or not squeeze, there is no try. So something to think about here if you are bullish on Yoda. Next, Cosm. So full context on the Cosm. This is a stock that we had covered in November on the briefings and on the channel. In post-split prices, we briefed on it during that cycle the first time on November 11th at about $3.85 a share. And over the coming weeks, it ran up to about $22.09 the morning of November 29th. That's a 473% run. Then it proceeded to sell off. They did the split and then sold off more into the new year. And then back on the 20th of January, a few weeks ago, we spotted a new squeezable McSqueezy trend on the stock. We briefed on it at about $3.32 a share on the 20th, and it's run up to $7.44 at highs, which was a 133% run briefing price to highs. Very lovely. But since highs, it's moved down aggressively, and as of Friday was testing a change of direction to the downside. The question this week that we have is, will it reject the change of direction and bounce back over our directional SMA and rally to a new high, or will it continue below it and break overall momentum? Well, no one's going to be able to tell you until open. But even if it dies off and momentum cools down dramatically, I believe there's a few reasons that Cosm will wake up again and we will have a new breakout. Cosm, similar to GNS, is also in the naked short war. They are investigating their trading irregularities. The CEO of GNS tweeted today that he had an interview with Upstream, who is managing their NFT coupon/dividend, and he brought attention to the fact that Cosm was the latest company to announce a dual listing with Upstream. With Cosm doing this as well, it's likely to cause people to connect the dots and keep Cosm very much in the forefront of the conversation. Quote, the planned dual listing of Upstream is designed to provide Cosmos Health the opportunity to access a global digital-first investor base that can trade using USDC digital currency along along with credit, PayPal, and USD, increasing liquidity and enhancing price discovery while globalizing the opportunity to invest in NASDAQ-listed Cosmos Health. So dual listing has the potential to increase the investor base that Cosmos can access, increase liquidity, and overall, if done right, could help the price discovery process a lot, because short sellers, they could screw with the price discovery process on the NASDAQ market. They can't screw with it on the upstream market because they don't allow naked short selling, they don't allow short selling at all. Price discovery is going to be a lot more organic, which means there could end up being a massive divergence between the value of shares on upstream and the value of shares on this NASDAQ market, which means that if you see that and people are like, okay, wait a second, well, if you remove all the naked shorts, this is worth a lot more. Then all of a sudden, you're going to have a lot of people buying the NASDAQ, and it's going to have a squeezy McSqueezy. The other thing, folks, is you really have to understand the small cap game that's going on right now. A lot of small cap CEOs are looking at the market, and they're like, okay, wait, now is the time to get people to buy back into our stocks. Now is the time to say that we are moving full force. We deserve your capital, not our competitors. We deserve your capital. Come buy the stock now, squeeze the shorts out now, so that later, if we need that share price to be higher to look good in performance reviews, to raise capital, yes, offerings are a thing, or to get better financing terms, then we can. And that's why you're seeing a lot of companies put out press release after press release. For example, since the start of 2023, there were 8 press releases from Cosm. For context, in August, they only put out 2 press releases when the small cap market was terrible. You have 8 press releases here, mostly very positive, mostly telling people that, yeah, we're back and we're playing offense, baby. And when I see this trend and I see things like, oh, we're doing buybacks, we're doing a share repurchase program, I see this as a stock that is really trying to convince investors that we're worth your money and we want to screw the short sellers that are in this. Okay, moving on. So we've been talking about Carvana as a horrible business model, but amazing contrarian squeeze candidate for a while. And then all of a sudden this week, the market finally agreed with us and it went up 73% over the past 5 days alone. It's up something like 212% year to date. And of course, you know what happens when stocks squeeze. The media play this game where they're like, yeah, this is a new meme stock. It's just some random squeeze that nobody could have predicted, except like, we were talking about this for a while. And then you got this new trending Seeking Alpha article that came out 2 days ago calling it the mother of all short squeezes, which could be upon us. This one I feel a little bit better about because at least they called it like it is. And they're like, yeah, I see the setup and it's really solid. They were a little late on it, but hey, we've been late on things too, so no hard feelings. So moving forward though, is there opportunity here? Well, according to the lovely Ortec, short interest is currently at 68.47% of free float. It's up 67% in the last 3 months alone in terms of short interest. This is what that looks like on a chart. Short interest has consistently climbed despite shares having gone down so much already. And shorts have been throwing the book trying to suppress this current rally. They are now getting the squeezy McSqueezy treatment, which is personally one of my favorite treatments. The stock is up a lot, but we are still basically at nothing compared to the highs at 376 back in August of 2021. And maybe that's not the most fair way to analyze it or the most relevant, but you rarely ever see a massive pump and a massive dump without any contrarian rallies. Yet this one has had basically no contrarian rallies, nothing to test the downtrend except for this little pansy one down here. You look at AMC, for example, it hit 72 at highs back in mid 2021, and then it dropped to lows in the 3s, but you had several massive contrarian rallies testing the downside. With Carvana, there's been basically nothing testing the downside relative to how much it has dropped. And given the high short interest and the varying levels at which short sold this short, I would argue that this has a lot more to go if we see market trends continue to benefit the stock. Anyways, folks, are you looking for your own short squeeze candidates this week? Well, here are some criteria that you want to consider. Number 1, mid-sized companies with short interest above 30%. Higher market cap companies with high percentages of short interest mean a bigger dollar volume is sold short, and thus it's more risky and thus more susceptible to squeezy McSqueezy. Number 2, small companies showing week over week momentum on clear trends like your chat GPT stocks, your AI trend stocks. Actually, AI, ticker symbol AI, is another one that you're seeing a really aggressive uptrend right now. I just remember that. Those types of stocks where you're seeing trends, make sure to keep those in mind. And then finally, number 3, of course, companies who announce they are in the naked short battle. They are investigating their short selling. They are investigating irregular trading behavior. They are investigating pretty much everything in regards to their short interest. They're putting out dividends to reveal the share count. They're hiring share intel, so on and so forth. Very bullish. Now, if you'd like to get access to our daily morning briefings where we brief on all the catalysts and trade ideas that we see each and every market open morning about 30 minutes prior to market open, well, I'll put a link to ZipTrader U down below, and you can access that and learn more about it. Membership also includes access to our step-by-step lessons, private chat, and other resources that you can learn more about below. If you are already a member, though, make sure not to miss tomorrow's morning briefing, because I think you're going to see a lot of runners right after market open, because a lot of heat has been turned up this weekend. I could be wrong, no guarantees, but it looks very hypey McHypey, and that means squeezy McSqueezy. In any case, folks, I hope you found value in this video. Make sure to hit that ravishing like button and subscribe, and we will see you in the next one.